let's start. Thank you very much. Okay, things I see something different in my screen. Always happens with Bloomberg. Right, thank you very much to you three. So complicated. As always, I will start with a joke. Yes, actually you missed my third joke, so I will tell you. You probably remember. So
I have still your video.
okay, so for you then. So the joke was two investors in a restaurant, and one of them to the other, if you give me your burger, and I will give you back half of the burger. That's a 50% return. Cool, and this week's joke is, I don't think it's very good, is, yes, if you think nobody cares about you, try missing 2 payments. So stupid. Anyway, okay, you all know me. The same first game of the session. Yes. So, as always, you all did this. So, I'm going to put here name. Then, stock, 6 p.m. let's say. Stock, let's say 7 p.m. and percentage difference. So you start. Yes. Cool. Because I don't know mine yet. Mine is gonna be okay. So we are looking for a stock to go up, isn't it? Yes. So I'm going to go for a stock. Let's do this. Okay. There you have it. So what else do we have today? Group meetings. Okay. I'm going to skip this slide. Right. I think this is a very good. Okay, let's see if. Oops. Right. So Umair, Oliver, and Shreya. Yeah, cool. So, have a look at that picture. You too. What do you think, Umair? I think the picture is really, really good because it clearly shows in the state that we are right now. Can you see the difference? Goodbye, goodbye, goodbye. And a goodbye. Oliver, have a look at that picture. Who wants to start? Tell me something about that picture.
This picture?
Yes. I mean, related to what's going on in the market right now. Yeah, just say something. Or what you think has happened since, I don't know, the beginning of the year in the stock markets. If there's been a bigger drop than in 2021, for example. What do you think? Oliver, tell me something.
No.
Nothing. Shreya.
Currently, Russian and the Ukraine issue is having a lot of effect on the global market. And recently, the European stock market, they recorded, they fell a bit and then they recovered slightly. But yeah, there is some uncertainty regarding because of that issue.
Very good.
Yeah, that and inflation on the other hand, record high. And plus, but on the other hand, companies are recording, companies are putting out the highest profit they've ever done. So
Okay, companies in general?
tech companies.
Okay.
And
not all of them.
Huh?
Not all of them.
No,
For
but
example,
they
not
are-
Facebook
but
or
most
Meta.
Most economy, that is different, but most companies are showing good, the economies are pretty strong right now. And on the other hand, people don't know if inflation is due to the supply chain thing or so they're not sure if the inflation is really transitory or it's real inflation.
Oh yeah, very interesting. Yeah, very good, guys. Very good. I would say yes. Ukraine-Russia conflict, inflation. So has to be seen what happens in the next months. If this drop is gonna be like a goodbye to carry on going up, or if it is a more serious drop in the stock markets. Cool. Market update, new central bank's interest rate hikes. So the first article is, okay, and now you don't see that. Whoa, this is actually, okay. Yeah, there we go. So very important news these days. Fed expected to back first pandemic era interest rate rise in March. Federal Reserve is set to confirm its plans to raise interest rates in March for the first time since the onset of the pandemic, as the US central bank charts a more aggressive course towards monetary tightening in the face of sticky inflation. Very important. We will see again if the inflation is sticky or is transitory and it goes back to more manageable levels of, let's say, 2%, which is apparently what central banks want to achieve. Right, next. Yeah, I'm not going to make the PowerPoint big because, I don't know, it just doesn't work well. Next one, similar about interest rates and inflation. Market signal expectations of at least 2 ECB rate rises in 2022. I'm very skeptical about this one because if the Fed is not very sure with a pretty big inflation number, is not very sure about when to start. Sorry guys, I'm going to close this. Or no, let's make this just in case someone comes and tells me about the windows. So yes, the Fed is not sure about how many rate rises in 2022 and when, and the ECB is even more skeptical about rate rises. So investors are betting that persistently high inflation will force the European Central Bank to raise interest rates more than once this year, a challenge to the central bank's insistence that it expects to freeze rates at historical lows at least until next year. I mean, it would be crazy to me for the European Central Bank, for the ECB, not to raise rates this year. But we will see. I mean, Europe is an area much more difficult to manage in terms of monetary policy than the US, because Europe has kind of the northern countries and the central countries in terms of France, Germany, and then the southern countries which have very different, I don't know, debt to GDP. So Spain, Italy have much bigger debts, and it's not easy to set rates for such different countries, whereas the USA doesn't have that problem. So we will see. But I mean, inflation, I don't think inflation will come down just nicely to 2% in the near future. That's my opinion. So let's see what happens with the ECB. Right. Anything on that? Anything on rate of the Fed or the ECB? What do you think? How many rate rises in 2022 of the Fed, of the ECB, any other central banks?
I think 3.
You think 3? The Fed, I guess.
Yeah.
Okay.
Not in 1 year.
Not this year.
There'll
Okay.
be 1 this year, but I think 3 all over. I mean, in the coming year.
In the coming years. Okay.
Yeah, maybe next year, maybe.
Okay. So you want the stock market to carry on going up?
Yeah, they won't crash it. I mean, they can't put 3 like one after the other, because then obviously it will crash.
So do you think that at this moment in time, not rising rates will mean not a crash, and raising rates will
Well,
mean a crash?
I'm saying if there's one rate rise, the market will react, not as extensively if there are 3 in 1 year.
Okay.
If there
And
are
what
3
do
in
you
1 year,
What do you think that, I don't know, I would say the professionals at JP Morgan or Goldman Sachs that
Yeah.
say that there should be 8 rate rises this year?
No, but I read the JP Morgan one. They said I don't know if it was JP Morgan, but one of the big banks said that if there are more than 2 or something, that the country will go into recession. Europe would go into recession.
Okay.
Because, I mean, 2%. 2% every. I mean, it's a lot. Like 2 rate rises in 1 year.
You think it's a lot? Okay. Yeah, I mean, good. It's good to hear different opinions. It's good to hear different opinions.
But, I mean, do you think there'll be 8 this year?
I don't know. I would say somewhere around 4, 0.25%
But don't you think if
rate
the-
rises.
But don't you think if there are 4, then market would react very extensively to 4?
I mean, the thing is that the markets in the USA at least have come down since the beginning of the year, mainly because they are already thinking that the Fed will rise rates, I don't know, I would say at least 2-3 times this year. You know what I mean?
Yeah.
So kind of market looks into 6 months ahead in the future. And
they have been expecting it, and it is like, but the thing is, it is recovering every time there is a scare. So it is going back again. I don't know what's going on. Like, it's very confusing.
yeah, good. That's why we are here to discuss these things. I mean, I find them very interesting and very difficult at the same time. Because yes, I mean, you could think that why rise interest rates if the economies need low interest rates to work well, let's say. But at the other end, you have inflation at the moment, and if you keep interest rates low, inflation just will ramp up so strongly that, I mean, cases like Turkey, for example, are very good cases of what inflation can do to a country, or Venezuela, I mean, as an extreme example. What do you think, you two guys? The thing is, I mean, this is so important. This is so important right now. So what do you think? Have you read anything about Fed raising rates, or the ECB raising rates, or the BOE, Bank of England, raising rates? Or what's your opinion? Do you think rates should be low forever, like maybe in Japan? But then in Japan they haven't had inflation for many years, or you should rise rates to keep the inflation low? What do you think?
I mean, I think like it's important to sort of maintain a balance, because as you said, it depends from country to country. Even though an increase in interest rates or inflation will have a global impact, because we are in an age where everything is connected, and so I think it's really important to sort of maintain that balance. Like even though you're increasing interest rates, and because that will sort of get reflected in the in the investor behavior, that will get reflected there. But then again, you have to counter inflation. So yeah, so it's a difficult task.
Yeah, I kind of like that word, balanced. Yeah, I mean, I guess it is an important one to balance between raising rates and keep inflation under manageable levels. Yeah, very good. What else, Oliver? What do you think? And also very important as well, that, as you said, I mean, inflation at the moment is something global, but that you have Turkey, for example, as an extreme of much higher inflation than the rest of the world. I'm pretty sure that in some parts of the world that are not in the news, inflation is not high, but yeah, I mean, let's say in the important countries, inflation at the moment is pretty high. Anyway, let's carry on. Because yes, I mean, I have this inflation out of control, but this is traders crank up bets on aggressive Fed action to combat hot inflation. Also are betting that Federal could deliver an extra large rate rise next month, or even lift borrowing costs between scheduled meetings for the first time since 1994 as policymakers battle blistering inflation. So yes, I mean, 0.25. I mean, I still feel that this is, I mean, nothing for the inflation that we have at the moment. However, traders in money markets are now pricing in a more than 50% chance that the central bank will boost rates by half a percentage point next month. Yes, I mean, the next rate decision date in the USA is March. I don't know exactly when, but I mean, you will know. We will cover that near that meeting. Next slide. Stocks and bond prices fall. Nasdaq continues to fall as US stocks sell off. Stocks on Wall Street slid on Thursday. This might not be very, because I did this morning, but I took it January 20th on Thursday, with the tech-heavy Nasdaq Composite taking its losses from its record high to near 13% as the prospect of higher interest rates has driven investors out of equities. I like this chart. S&P, Nasdaq, and Russell. This Russell is kind of the small cap index, which comprises probably the biggest 2,000 small caps, so kind of up to a market cap or market capitalization, which means that they are small companies, but the biggest ones in the USA. And we have here, yes, I mean, kind of smaller stocks, or the ones that their earnings are not very, let's say, stable, are the ones that tend to drop the most. They also, I mean, just more volatile, let's say, than Nasdaq in pink and S&P in dark blue. Probably the Dow would be less, should be probably -4%. We are going to see it later. And what else? This one is Wall Street stocks decline as tension mounts between Russia and Ukraine. S&P 500 falls 1.9% on Friday. Yeah, this was, yes, last Friday, probably at the close of the US markets. Equities on Wall Street fell on Friday after the US warned that the Russian invasion of Ukraine could come within days, and the UK's Foreign Office urged its citizens to leave the country. Actually, I feel that this drops into the beginning of the year is more of inflation rather than this. I mean, this has made the stock indices to fall a bit more, but in my opinion, it is pretty much everything because of inflation fears, let's say. And something interesting that probably I said in the last meeting, Umair, is that we still think that Nasdaq, for example, is still doing pretty well, but we have to be very careful with that because the companies that are making the Nasdaq to not do very badly so far are, yes, Amazon, Google, Microsoft, Apple, and all of those, because the rest pretty much of the Nasdaq 100 constituents are not doing very well since April, May, June last year. Okay, but the thing is that those bigger stocks are making the index going up and up and up because they make, I don't know, something crazy like 30, 40 or 50% of the index. So you have to.
How is GDP going up in
The GDP. We could check that.
The metrics by what you judge the economy are going up, but then at the same time.
Can I check this here? I don't know now the function for that. Inflation. No, I don't know, but that's a good point. And I really don't know right now about GDPs.
GDP US.
Where?
The search bar.
Yes.
News.
Let's see this one. I wouldn't want to say too much about this because this is 2020, 2021. No, I wouldn't. We can check it after the meeting. Okay, right? Right. Something very important that I want you to really understand: what inflation does to companies and to stock markets. This is really, really important that you understand. First, higher interest rates increase the cost of borrowing for companies, which can be problematic for loss-making groups who don't yet have the margins to absorb rising rates. So companies need to borrow money to pay debts, to increase the company. I mean, buy new products, buy new, I don't know, shops or whatever it is. And if rates go up, all that money that they need is more expensive to borrow. So they will need to make more money to pay that debt that is now higher, okay? And this second one, but there is another issue with many of the loss-making but fast-growing companies in the tech industry. Valuations across the sector have been bolstered by low and negative yields on treasuries, which are used by investors to value profits that will not be generated for many years to come. As yields on treasuries rise, the relative appeal of those future profits decline, which in turn weighs on investor demand for shares of those companies. You were not in the last meeting, which I think was important in terms of cash flows, but as well what higher interest rates mean. So if we have to value a company depending on its future earnings, so all those future cash flows, I mean, you might have an idea of what we did in the last meeting. So those future cash flows that have to be put back into the present time, because that base rate is higher, that future earnings are a value less in the present. And because they are value less, the share price is based in those present time future earnings or future cash flows, put them in the present, and at the end of the day the share price of that equation that you have to get the share price is lower. So this is really, really important to understand why interest rates are so important for yes, I mean the borrowing of companies and their earnings or future earnings. Cool. Market update. Indices and stocks. US markets between 4 and 12% down year to date, so from the 1st of January, let's say. And UK Ftse 100 2% up, which is quite impressive, and EU markets between 2 and 7% down. Let's show you these W World Equity Indexes. The first one. We have Americas, Dow Jones, S&P 500. I think this one is the most important column. So we have Nasdaq, the highest drop so far this year. This is YTD's year to date percentage change. Then we have S&P 500, and then we have the Dow Jones, which are kind of the most robust US companies, let's say. Then very impressive as well, this is the Brazilian Bovespa. I don't know what this I is, or index might be, I don't know. And then in the EMEA, we have the Ftse 100, 2% up at the close. And the highest drop, this is Stockholm, I think. And then IBEX 35, Spanish one, and then in Asia Pacific, Hang Seng, this is Hong Kong as well, very impressive. And then we have 6% Japanese Nikkei, this is Chinese CSI, and this is the Australian index. Cool. Anything interesting that you see there? I mean, I would say these are pretty much the most important indices in the world. This might be Mexico. Yes. And another one, okay, the Swiss one. This one is, yes, Stockholm. This is Italian, German, France, UK, European. Yes. Anything that you want to mention of why you said something at the beginning that European markets fell less than the US markets, or that they recovered a bit more than the US markets?
I just read this on like today in the morning.
Okay.
This was this article on Financial Times.
Cool.
About them recovering a bit after falling. I mean, I think they recovered a little after Russian foreign minister kind of said something like we're continuing the talks after that. So.
Okay. Yeah, good. Actually, let's check. Yeah, we have this vertical line here, which is the beginning of the year. We had this very interesting day, 24th of January, which left that as well very interesting candle. If you want, one day we can cover some of the... I mean, I don't have much idea about this, but this tells you that there were, let's say, big buys that day. So the price, actually I can tell you, so let's focus on this one, in this white one. So the stock or the index starts at that point in this case and ends, I think I lost it, yeah, and ends in here. So it started exactly at this lowest point and ended exactly at this highest point. But for example, if we take this one, the price of, this is actually the S&P 500, started exactly there, then went down to that level, then went up just above the closing price and then finished at that closing price. And then if we take one black one, which is a one that the index finished lower, so here the index started, let's take this one. Can we make it bigger? Yes. So this one, the index started there, right above the body, then went down, started here, then went up to the highest point, then went down to this lowest point, and then ended just a bit below the starting price. That's why we have the body black, and then the kind of the lines, let's say, above and below. So you need to see if it is white or black first, and then see how the direction can match the opening and closing prices. Okay, and this is just a daily, a daily. So each candle is a daily stock price move, let's say, or index price move. Cool. Any questions on that? To the right. So yeah, as we said, actually I was going to say that. So the year started here. This was 3rd of January. There were no trading sessions 1st and 2nd of January. Yeah, probably here we all were scared about inflation fears and Russia invading Ukraine. And then yes, the foreign minister of Russia came and said yes, there won't be any war, and market said great, let's move up. And then now these days markets are not very sure if there will be a war between Russia and Ukraine or not. Cool. Anything on that? Yes, I showed this, or anything on this. I mean, I find this so interesting. I hope you find this also very interesting. Cool, let's move on. It's 6:45. Let's try to keep, yes, market update, indices and stocks. Any index that you want to discuss? Any stock that you want to discuss that you've read about? I might not have any idea about that index or a stock, but you are free to bring up that discussion. Anything? Oliver? Where are you from, Oliver? Taiwan. Okay. Is there any interesting in your country's stock market? because kind of people tend to look more into their own country's stock market. So, is there anything? Taiwan weighted. Okay, so it finished today at 18,000 points. I have here. Actually, yeah, there was a big drop today on the index. No, but actually, in general, in the past 5 years, the index have been doing very, very well, and it's near the record highs of 18,600 points. So yeah, very close to record highs. Yeah, I think, I mean, you can always find interesting stocks or indexes that are kind of out of the ordinary, and that might be doing something very different to what most of the indexes are doing. Because I mean, that's something that I've always wondered, and I really want to understand why indexes and stocks pretty much move in the same direction all the time. But yeah, so anything on that? Or you don't have any idea about that? Cool. Yeah, that's fine. That's fine, Oliver. You can say that. Portfolio performance. Interesting. Explain stock trades in ex-ante and Excel. Cool. We have a lot to talk about here. Right. First, where is... Okay, I don't know why I don't see the whole screen. Now, yes, cool. And no, I think I don't want to. Yeah, I don't want to see this. Cool. This is our portfolio at the minute. Right. Mainly, these are our fixed income or bond positions. Here we have government and corporate bonds, corporate companies, and these are stocks. So as you can see, I think I more or less explained. I'm not going to say that I explained that well. You can say that, Umair, but yeah, I explained in the last meeting pretty much everything that you need to know about fixed income and what interest rates do to fixed income investments or to bonds. But mainly, interest rates are likely to go up. It's very funny, Umair, because we speak a lot about how many rate rises and all of that. But I think the Bank of England rose rates recently, but I mean the Fed and the European Central Bank have done nothing yet. So, but that's the point, is that the market...
It's good for us if they don't do it.
But the thing is that the market is kind of trying to see further into the future.
I mean, it is going to happen, so the market is just trying to judge when it's going to happen, and they're just misjudging it every time. That's why it's going back up.
Mm-hmm. Cool. So yes, interest rates go up, and that means prices of the bonds. The thing is that I can try to explain it very quickly. So, for example, yeah, let me try to explain that example. So, Oliver, imagine I need £100 to buy a phone or a computer or whatever it is, and you give me a 5%, or I borrow from you the £100, and I give you a 5% return in the next year, so at the end of this year. So at the end of this year, he will get 5%, yes, £105, okay, right now. But interest rates go up, and you are the person that, let's say, does that or benefits from that. Because now you come to me and, or yes, let's say interest rates go up. So now I need more money, and you offer me a 10% instead of a 5%. So even though I don't want that, because rates are in that level, I have to do it. Okay? So imagine our trade, let's say, has a price, and our trade, someone else can buy it. So because now there is a higher rate that, I mean, much better than this product, this asset or investment, the price of this investment goes down. Okay, because now there is a better product, because there is a higher interest rate. Okay, so what happens with all these bonds? That we bought them some time ago with rates at some level. Now interest rates are likely to go up. So what happens to the prices of these bonds? That they go down. I mean, if you compare this to this, down, down, this, down, I mean a little bit, but down, 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 down. So I actually, I mean, didn't understand this for some time, but what you need to think about bonds or fixed income as well is that they have prices, and that their prices go up and down like stocks. Okay, so when we buy a bond, it has a price and it can go up or down, and because interest rates are likely to go up, the prices of the bond have come down, so we are losing money there. But you might be wondering, but why did you buy something if you more or less knew at the beginning? Probably I said in the second meeting that I wanted a 50% portfolio of bonds, because I was thinking that idea of investment would win the competition, because bonds, even though have come down in price, have come down in price much less than stocks. If we would have had this in stocks, pretty much in any stock, we would be losing now much more money.
When are we going to get the first coupon payment on any of these bonds?
Right, very good. Thank you for that. Now, ex-ante apparently doesn't do anything with coupon payments, and I spoke to Jacob, because Jacob, one of the fund managers, had plenty of bonds last year in last year competition, had plenty of bonds. So I asked him about that. He didn't give me a good answer, but we kind of agreed to add the coupon payments to our losses, or to our general account value, let's say. So in coupon payments right now, we would be adding, I don't know, I would say between 10,000 and 20,000 euros to our portfolio. So we wouldn't be very far away from break even, so having the 1 million euros in our portfolio, which is pretty good. I can see your face that maybe you don't understand some things. If you don't understand some things, ask me. So coupon payments, what fixed income has, apart from the price of the bond going up and down, and that they are most of the times less risky than stocks, is that they have coupon payments. That's why they are called fixed income. And those coupon payments can be paid yearly or twice a year or quarterly. So that 5% interest could, maybe that wasn't a good example, but imagine that apart from that 5% interest, there is a coupon payment of £5 a year. So at the end of that investment, you would have 110. So the 5% interest plus that 5% coupon payment, okay? But because ex-ante, I guess that in the real, has to do in the real account, it has to add that value somehow, either to the price of the bond or just to your portfolio in cash. I really don't know that, and I just don't want to contact anyone on ex-ante for that, because it should be pretty simple. I mean, that cash should have been added to our portfolio. Anyway, so yeah, good on that. Now, stocks. I bought, actually, these are 4 new stocks, but before that, I need to talk about these stocks. Yes, because okay, so in the last meeting, we had these 4 stocks in our portfolio. All of them were long. So long stocks, we buy them. Short stocks, we sell them. Long if we think that the price is going to go up. Short if we think the price of the stock is going to go down. So I closed Apple because I just had a sense that the price, or I mean, something had to happen in terms of inflation and rates going up. I didn't sell it at the peak. I mean, 169. This was 7th of December. Let's go here and let's look for Apple. Thing is that I feel that I can't speak for so long. I mean, cool. Oh, this is really good. We have here the. Yes. So this white triangle here is when we bought the first time Apple, and I sold it. I said the 7th of December. 7th of December. Yes. Then it went up to 181. But I mean, at least we made some profit. And there, here's the profit, here's the percentage return. Then, what else? Pfizer, I think you came up with this, Umair, or with Gabriel. Anyway, in terms of making more money, then I closed that stock. If you have any questions about why I did it kind of in more depth or anything, you can tell me. So we bought the stock here and we sold it here, and it's right now here. Again, I felt that market, it was getting just a bit too overbought. So I closed that position, and that was a good trade. Where is Excel here? We made this money with this percentage return. Then we have Joel, Canadian solar energy prices go up, and Skyworks Solutions hides demand semiconductors. But these stocks just came down. I closed this one intentionally before the stop loss, and this was the stop loss was triggered. Yeah. So let me go for Canadian solar. There was a good example of in terms of technical analysis. Let me delete this. Cool, so we bought it here, and the stop loss, so that's Canadian solar. Stop loss 38, the stop loss 31. Okay, so yes, I probably, no, that was triggered automatically. 31 here. Yes, I put that stop loss there because kind of this, actually I removed that resistance in the price, more or less, with these 2 supports here. Cool. What else? We have Skyworks Solutions. Again, I closed that position. I just felt it was going to fall down more. Skyworks Solutions. So we bought it here, we sold it here, and then the price hasn't done much since then. So yeah, now what I've added today, these 4 new stocks. No, actually, first I need to talk because I shorted.
I actually need to leave. I have only one. My friends are actually waiting outside.
You can leave, Umair, no problems at all.
Thank you so much.
So, then, yeah, it won't be longer than 1:30, okay? So then, I shorted Tesla and Apple. Thank you for coming, mate.
Yeah. See you next meeting.
Bye.
Bye.
With the Canadian solar and the other one, why did you get an intuition that you should sell at a loss also? Why did
So you mean why I kind of closed the positions with losses? Mainly,
the logic?
mainly because I just thought that we were in a moment where markets were peaking, let's say. Okay, so I just thought we were going to lose more money by holding those positions. Okay, so this one, Canadian Solar, it triggered the stop loss. So we always have a stop loss of 20% down for a maximum of 10,000 euros loss. So a maximum of 1% loss for the whole portfolio for each trade. Okay, that's kind of how is it called, managing risk. Okay, so we bought it at 38. My calculator said that a 20% down was 31. The price of the stock fell from 38 to 31, so the ex-ante, the trading platform, closed that position. Okay, we didn't want to lose more money than those 10,000. 10,000. Actually, this number, if this is a 20%, that doesn't make much sense. Anyway, but yes, mainly because of that. And this position, it wasn't related to the stop loss. This stop loss was lower, but I just felt that below that point the stock was gonna drop further. Okay. So then again, when I thought that stocks and indices were peaking, I shorted Tesla and Apple. Again, I shorted them 2 prices. In this case, the stop loss is higher. Okay, in case if I think something is going down, I need to put that stop loss higher. Because if the stock goes higher than that point, the trading platform closes the position again, because I think if the stock reaches that point, I think that it will go higher. In this case, I will lose more money, and I don't want that. I want to control the risk, and I want to manage the risk. So I opened those positions 27th of December, and I closed them 24th of January. I think it's good to see again Apple. It's not there. So again, this is the first trade, and then this is 27th, Monday. I shorted the stock here. I must have put the stop loss, I think it was 125. It's this one is yes, 185. Why I shorted here? I said if the stock, kind of a bit of technical analysis, let's say, or a bit of intuition, yes. I thought if the share price of Apple goes above this 185, it is making a new record high. There is no resistance at all above that price. If that happens, I think the share price of Apple will continue to go up, and I don't want that because I will lose money. So then I close Apple and Tesla in that this day, which was quite significant. I don't remember exactly what happens, but so I closed them there. Unfortunately, the price of both Apple and Tesla since then have come up. Okay, actually not Tesla. Tesla is again. So again, Tesla, I bought it here. I put the stop loss probably above this maximum price. Again, if it goes above that maximum, I think it will carry on going higher. So I don't want that. But it didn't reach that, so the stop loss was not triggered. And then, actually, this was that earnings day of Tesla that the company said that they did very, very well. But then the price came down. I sold that same day, but Apple has managed to come back up a little bit, but not Tesla. So that's right now the portfolio. I think, in my opinion, we are doing the best in the rest of the groups, or compared to the rest of the groups, just because we are almost break even, and I'm pretty confident that the rest of the groups are losing quite a bit of money. So one of the things, actually, it's interesting to listen to Meyer because he has a very bullish sentiment, and the problem for kind of new investors, let's go back since 2009, 2010. Since then, the market, except, I don't know, COVID, March 2020 because of COVID, and maybe December 2020. No, sorry, December 2018. Yes. So, except this was COVID, and this was, yes, December 2018. So, except that, pretty much since 2019, new investors that have come to the market. So not only investors coming to the market here, or here, or here, or here. So we've only known that the stock markets and pretty much everything goes up in price. But unfortunately, that's not how a healthy stock market should do, and that's why I think this era of buy everything has or is coming to an end. But it's interesting to listen to him because, and actually in last meeting he told me that we should be invested, because if we are invested in stocks, we will make money at some point in the future. But it's very, very important to realize that in many, many occasions in the market, the best thing to do is do nothing. Okay? Is to stay away from the market. Okay? And this is a really, really good example. Or this competition, in my opinion, is going to be a really, really good example of the best thing to keep and to preserve your capital is to do nothing in the market, or, because this is a game, to go for the investments that are the least risky, in this case bonds. Okay, so if you need to learn something from this meeting, for example, is that yes, in many times the best thing to do is to stay out of the market. Okay, because the only thing that you can do if you keep staying in the market is just to lose money, and then you need to get that money back, and that is very difficult. So I don't know if I said this in that second meeting, but I always say that to make money in the stock market is very, very, very difficult, and to lose money in the stock market is very, very easy. So you need to be very, very clever not to lose any money, and then to start thinking about making some money. Okay, cool. Let's carry on. So explain stocks, explain bond performance, new additions to our portfolio. Again, if you want me to explain you in a little bit more detail, come to me after the meeting. Analyst trade ideas. Quickly, do you have anything? No. Oliver? No. Cool. Again, you can say no. Don't feel embarrassed by that. I think you must have been this slide. Cool. Now. Okay, actually, I haven't said anything about these new stocks. These new stocks are British American Tobacco, Johnson & Johnson, Mercado Libre, and PayPal. So we have here Mercado Libre. I shorted. It's a Nasdaq 100 constituent and is an e-commerce company. British American Tobacco, I bought it. Ftse 100, so a British stock, tobacco industry. I have to say something about this, very important, that I wouldn't put real money into this stock because I think that tobacco has just done terrible things to the world since we came up with tobacco, so I wouldn't put real money there, but because this is a game, I'm doing it. Then Johnson & Johnson, S&P 500 company, pharma company, and PayPal. You probably have heard about PayPal, Nasdaq 100 member, and financial technology. Now, instead of telling you, I was hoping to have, at least 4 people here, but it's fine. Because instead of telling you, okay, come up with a trade idea for the next meeting, which most of the times doesn't happen, I'm going to do something different. So I'm going to assign you one of these 4 companies to one of you. So a company for you, for example, and another company for you. And you have to do something, please, for the next meeting. So, there is no correct or wrong answer. One PowerPoint slide, so like this, with some bullet points, or maybe 2 slides with some bullet points and a picture that shows why those bullet points. Research the company, check the trend of the stock's share price. By trend, I mean this clearly, the trend of this index, for example, clearly goes up. Okay. What they do. So do they sell burgers? Do they sell laptops? Do they manufacture, glass? Is the sector where they are in doing well at the moment? Because a company might, or you might think that a company might be doing well, but maybe the sector doesn't have a good reputation in that particular moment, and that makes that company that is doing well to not perform as well as you think, for example. So recent news of the company, financial ratios, you don't have to, you can go as deep as you like. Financial ratios, is the company making money? Check net income, very, very important. Check earnings surprises. Are the earnings releases or do the earnings release surprise the market to the good or to the bad? So the market thinks the company is going to make £1 billion in last year. So was it better or worse than that? Check analyst coverage. You can probably do that. Let's pick British American Tobacco. You can probably find what I'm going to show you now in any other website. You might need to look into, or you might need to find it. estimates Analyst Coverage, and here apparently very clever people say, okay, so for British American Tobacco there are 22 analysts, 17 of them think that you should buy the company, 4 of them they say that you should hold if you have the company, and one of them says that you should sell. So check into it and into this, and they have different target prices for the company. Now be careful with this, because it's just something else to add to your analysis. Okay, don't go and buy a stock because someone at Goldman Sachs says that you should buy the stock, because they've done some research and they think that because this, for example, is it says here total return over the last year to an investor who followed the analyst's recommendation. Maybe for British American Tobacco you would have done well, but if we go to Peloton, you probably have heard about Peloton, and if we do the same, we see what the analysts think about Peloton, you would have made, you would have lost plenty of money. Okay, so you still have analysts that think that you should buy, but you know what I mean. It's just something. It's like with financial ratios, that one ratio doesn't tell you anything. It's kind of the big picture of what you are doing that tells you you should buy or sell. So make an analysis to support why I made the decision to buy or sell the stock. However, make a point as to why the trade might turn, or this is a RAI, yes, a RAI. Okay, so now I need to, yes, here. Oliver, Shreya, which of the 4 do you want to analyze? Eh?
Johnson and Johnson.
Cool. And it is HA like this?
Yeah.
Cool. Oliver. Okay, very important. Take a picture of this. So very important. I bought the stock. Okay? So you should look into why I bought the stock. But very important as well, think or make a point of why the stock should, even though I think it's a good buy, and you also think, because you research the company and you think as well that the company is going up, you should make a point of why the company can go down. Okay, Oliver. So Mercado Libre is kind of the Latin American Amazon. British American Tobacco is a defensive stock. Do you know what a defensive stock is?
What is tobacco?
Tobacco is smoke. So, Shreya, do you know what a defensive stock is?
Defensive stocks are those, right, which perform well in recession? Are those kind of, no?
Yeah,
That's,
yeah.
That's
Yeah, more or less. I mean, kind of have strong earnings and dividend payments no matter what the stock market is doing or what the business cycle is at that moment. Did you understand that, Oliver?
Yeah.
So let's say that people unfortunately smoke no matter if we are in a recession or not. Actually, I think it matters. I mean, you could look into that because I think it matters. I don't think people smoked as much in 2008, sorry, in the financial recession than 2 years earlier, just because people had probably much less money to spend. So it's one of the things that you tend to get rid of if you don't have as much money as before. So, Mercado Libre, British American, or PayPal? PayPal, you must have used PayPal.
Yeah.
Yeah, cool. So, which of the three?
The last one. Probably.
Which one?
The last one.
Last one, PayPal. Cool. So, very important, Oliver.
Yeah.
I shorted this company. So I think the company is not going to do well. Okay? So you need to look into why the company, or why I think the company is not going to do well. Okay? Could be anything. I mean, could be an article that you read. Could be a chart of the share price, anything.
Oh, okay.
But read, okay? It's very important. Read, and read. Actually, are you doing business school degrees? Yes, and I think so as well, no? So yeah, I mean, I guess that you are most of the time reading, so you are very good at that. Cool, so we have 8 minutes. Let's go straight to the Kahoot, because I think actually... No, actually, let's do this quickly, because I think it's very important. Something really, really basic, but something really important to know. Let's do a bit of technical analysis today. Actually, I don't think if this would be called technical analysis, but a healthy, I don't know if to put this like this, upward trend. Stock raises and falls, but the next upward move goes above the last short-term maximum value, and the next downward move does not go below the last minimum value. This pattern repeats until the upward trend ends. Right, it might be a bit confusing, but if I show you this and I explain you, actually let me remove this. Now, what is a healthy upward trend? Looking into the share price of a company. Actually, before, very important as well, before you do anything with any company, go and check. I mean, this is an index, but it doesn't matter. Go and check what it has done, that company or that index, since the beginning. Could be 20, 30, 40, 50 years. So you get a big picture of what the company is, or what the index is, or I mean is or has done. Okay, and then, because that gives, just by looking at that, gives you if you have a McDonald's or a Coca-Cola, or if you have a Peloton. Okay, if you compare McDonald's with Peloton, McDonald's has only done this since the beginning, and Peloton, I mean, actually Peloton did this as well. Okay, so get the big picture of that stock. So that upward healthy upward trend, what do I mean? Okay, so we have the first minimum, maximum. In this is from, let's say December 2019 up to today, S&P 500. So for a healthy upward trend, we have this first part. So forget more or less from here to the left. We have minimum, maximum. Then what happens in the next downward move? Let's take this one as one. So this one doesn't go below the shortest minimum price. Okay. Then the next upward move goes above the latest maximum price. Then the next downward move does not go below the latest, more or less clear minimum price. I mean, you could check all of this, but you need to get an idea. Then here, for example, could be interesting because this maximum or this rise in price doesn't go above this price, but I mean technical analysis or this that I'm telling you is not rocket science and it doesn't work just 100% of the times. But for example, this one doesn't go below this point, then this point or even this point goes above these two or this one and then this one. So we get this. Now we are in a moment in which this has been broken, this pattern kind of like in here or here. So we've come down more than the latest clear minimum, and we haven't been able, or the index hasn't been able to go above that maximum price. Okay, so we are in that moment now, which goodbye, sorry, goodbye. Could this be a goodbye? We will see. Related to the picture that you saw at the beginning. That's it. Finally, okay, we have the two games. Let's do it. I mean, do you have, let's say, 15 more minutes? So. Oliver? So let's finish with the game, and then let's do the Kahoot. Or, I mean, if you want, do you want to do the Kahoot? It's up to you. Yeah, I think that let's do it because I mean the Kahoot is related to the seminar, let's say. Cool. So we have my no, because my stuff is done. With respect to this, so group is now 27.4. So I have a calculator here if you need it. So my 27.4, so let's say minus 2.2%. Yeah, you can. Is today gonna be the one that loses the least? I think I'm gonna be last. Moderna 12% down. Cool. So, and Oliver. Right, so get your phones ready. Kahoot. So how did you do, Oliver?
Next week. Yeah,
Were you positive or negative?
next week.
Eh?
Next week.
Negative.
Yeah.
By how much?
1.77.
And you?
1.73.
Oh, so you are the winner. Well done. Very, very well done. That was close. Cool. Where I am here. So this one, play. Continue with, yes. Start. Classic mode. Where is the pin? There it is. So, first present. What do you want? One of all. So yeah, very fast. Cool. Actually, this wasn't mine. So let me leave this somewhere in here. St. Yo, cool. Oliver, cool. Start. I mean, everything is related to maybe not the the first 3 or 4 questions. S&P 500 started the session at which level today? This is not an easy one. Because actually, which one is the correct answer? Yeah, I think so. Yes, 4410. And you went for 4136. Cool. Oh! 0 points. The Nasdaq 100 started the session at which level today? This one might be a little easier. Just because there are higher differences between the answers, I would say. Good. Who got that right? Oh, good, Oliver. Next one. The Ftse 100 kicked off today's session at which level? This one it's not easy either. Ooh. Ah, Oliver. Yeah. Cool. Next one. Interest rates around the world are likely to, in the near future, stay the same, fall, rise, rise and fall. Cool. I think that one was an easy one. So, yeah, I don't think they will fall in the near future. They are very, very likely to rise, only to rise. Okay, Oliver. Higher interest rates, the cost of borrowing for companies decrease, increase and decrease do not affect increase. So, more or less, if you understood what I said earlier, cool. Well done, guys. There is. If interest rates increase, the appeal of companies' profits increase. Neither increase nor decrease. Increase and decrease, decrease. Again, if you understood that idea of what interest rates mean for profits, for company profits, very, very well done, guys. Really, really important to understand that. The index that has dropped the most year to date is Ftse 100, Nasdaq 100, S&P 500, Dow Jones 30. If you were paying attention to that WEI function, Nasdaq 100, yes. Okay, actually it's not here. Yeah, actually now 12%, I think. Yeah, I think it was more or less as well 12%. Cool. We have 2 questions left. The strongest stock index in Asia year to date is actually of the ones, and actually I just put that. So you had the answer there a moment ago, but actually it's not easy, this one. Yeah, Hong Kong's Hang Seng. Who got that right? Cool. Australia. Oh, that is getting close. So we have 2 more left. The share price of a healthy upward trend goes up without reaching previous highest value. Okay, you can read. Might take you a bit to read everything. Very good. Yeah, the third option does not go down more than the previous value. That means that it's not breaking that pattern of not going below the previous minimum value. Oh, Oliver, you dropped to second position, and the percentage change in an asset is calculated. You probably got this question as well in that second meeting. Original price times latest price. Original price divided by latest price over. Yes, very, very good. So probably you got that. Another positions, nobody. Second, Oliver. Third position, Shreya. Cool. Well done. Again, you have the price. Do you want more Ferreros? Okay. There you have them. Cool. So, very last slide. Thank you very much for coming. You can message me at any moment. You can talk to me now if you want. Look for possible trades, or actually look for Johnson & Johnson and PayPal. And see you in 2 weeks. Next week there is a fun meeting. Next Thursday. So yeah, this is today. Next Thursday. So not this Thursday, the one after this one. So because there are no any other LUUTIS meetings or seminars, it will be Monday. Actually, I'm not here on Monday, I'm in Spain, but I'm coming back Tuesday, and very possibly it will be Tuesday. That's it, guys. Thank you very much.